Morning guys, Joel Frank here, market analyst for YouTrading, and today we're taking a look at the Nasdaq 100, the tech-heavy US index. These are just CFDs. They pretty much track the Nasdaq 100 futures, which is why you can see that it is currently trading even though US markets aren't actually open. But obviously the futures and the CFDs give you a really good indication as to what's going to happen with the cash index when it does open. So that's why we're having a look at it. So what's been going on then? As you can see, so by the way, this is Nasdaq on a one-day chart, and it's been looking pretty ugly in the last couple of days. Been looking, yeah, very, very ugly, especially yesterday. I think yesterday's sell-off was 2.6%. The worst day for the Nasdaq in a couple of weeks. And there's this area of near-term support that had been propping us up, or propped us up at the end of last week, that we've now seemingly broken through to the downside. And I suspect that opens the door to a test. If we just zoom out, you can see there's this long-term uptrend that's been fairly well respected. Well, the door is open for a test of that uptrend around the 13K level. And if that does go, then we're probably going to go all the way below 12,500, and we're going to hit this area here of support. Because if you look all the way back since, early September, this sort of the mid 12,000s, sort of 12,500, 12,200, that was pretty solid resistance. But then, once we broke above this area last December, it's acted as pretty good support. So whatever happens when we get into this area, if we do break below this long-term trend line, there's going to be some choppiness, potentially some people trying to get long. And obviously, if we break below that, then my goodness me, we could be in for an even deeper sell-off. But I wouldn't look that far ahead just yet. So we've been seeing this selling pressure. What's been causing it? Well, two words really: inflation fears. Commodity prices, there's been a lot of focus on this week. I mean, recently there's been a lot of focus on commodity prices, but iron ore was up, I believe, 10% yesterday at record highs. Copper was also at record highs yesterday. Lumber prices have been shooting up. Pretty much all commodities or all important raw materials have been just going absolutely crazy for various reasons. The main reason for the recovery in these commodity prices is to do with expectations for a global recovery, but then you've also got concerns over supply in some areas also boosting these prices. And when you have commodity prices rising like this, well, it does put upward pressure on inflation expectations. And typically, the Nasdaq in particular doesn't really respond well to sharp increases in inflation expectations. By the way, this is an important gauge to look at if you want to know what's happening with inflation expectations. US break-evens. So I like to look at the US 10-year break-evens. So what that is it's the difference between nominal US 10-year government bond yields and real US 10-year government bond yields. And the difference between the nominal and the yield tells you what markets think inflation is going to be. And that shot up to, well, above 2.5%. And remember, the Fed's inflation target is 2%. So as inflation shoots up, it's just going to stoke fears of potentially higher interest rates. I mean, the Fed is not signaling that they want to hike anytime soon yet, but let's just see what happens with inflation, because there will come a point if inflation gets too high, the Fed will have to act. They know that. They have said that if inflation does get out of control, that they will act. We're just going to have to wait and see if it happens. And obviously, Nasdaq is very, very sensitive to anything hawkish from the Fed. It will hate it. So in terms of key risk events this week, for the rest of the week for the Nasdaq, CPI, obviously on Wednesday, US consumer price inflation data. It is expected to come in very, very hot. Markets have been expecting for a while. It could even be above 4%. I mean, who knows how high it could be, really. I mean, some people calling for it to go as high as 5% potentially by June. But yeah, potentially could be above 4%. That does kind of reflect weak base effects last year, because remember last year we were in lockdown and prices were kind of plummeting. in a lot of industries. So, but still, just going to have to gauge. Market's quite sensitive to inflation fears, so that is definitely the main event that I've got my eye on for the rest of the week for the Nasdaq. So guys, hope you enjoyed the video, and I will see you all in the next one.